people an update of where we are. And it's not, as I say every time we do one of these with Scott, this is not to scare people. Not at all. This is just the God's honest truth about what is happening in the economy. And frankly, when it comes to the banking system and the financial system, what does have to happen in order to get us to that point where the system is depleted, the power is taken away from the cabal, and we can move into that new system. This is an obvious one. It connects a lot to what we've already spoken about, but this chart is showing you the federal deficit adjusted for inflation. And it's noted here that in the last 4 years, the government spending has now exceeded the combined spending of World War I, World War II, from 1970 to 1990. And just look at that chart, right? So, Scott, you've talked about this a lot with the flood of money that came in, especially post 2020. But it's these are the things, going back to what Mark is talking about with the media, that you just don't see this stuff. They're not, if the evening news showed these kind of things to people on a daily basis or on a weekly basis, we would have a much more educated populace.
The only way, there's no other way. And see, these people can't see it because they're like, Clydesdales on their horses with this stuff too. And I'm going, the only way is a gold-backed currency. Because what happens is that you flatline that number to zero with this.
The numbers have gotten so large, and we've said this before, it bears repeating. The numbers have gotten so large that when you hear what Trump is promising, I think everybody now should understand that there is absolutely no way. If Trump was president forget another 4 years, if he was president for another 40 years, there's no way in the current system to unwind this hole. Like I said, it would be like telling somebody that makes $40,000 a year, oh, you have $400 million in debt. Yeah, you'll pay it off in a few years. It's not possible. It's simply not possible.
So small businesses are not trying to make the killing. They're the ones that are getting smashed with that.
All businesses are. So that's leading into my next point, and this is what I was talking about with the stock market. I think it's a pretty safe assumption that almost very few businesses, unless maybe you're in the repossession business, are making more money right now. That should be common sense. So I'm going to get a little technical here, but I think this is important because people need to understand this, especially if your money is in a 401k in the stock or the bond market, especially the stock market, right? Okay. What is a P to E ratio? This is the most simple, basic way to look at the stock market without boring anybody that I can tell you. Basic math, right? It's called a price to earnings ratio. And that's it on the screen. You take the price of the stock and then the earnings per share. And basically the earnings per share is just their profit or their loss divided by the number of shares readily available. And you get what's known as a P to E ratio, right? So I think we're going to use some common sense here, right? If the company isn't earning any more money, that lower number is staying the same, and the share price is going way up, what is going to happen to that P to E ratio? It's going to get bigger, right? Basic math. Conversely, if the share price stays the same and the earnings drops really, really low, same thing. That P to E ratio is going to go up. So when you see P to E ratios going way up, it means something's going on with the company, right? So what you guys can do if you're bored is you can look around and say, well, historically, you can look by sector, like if you're looking at tech, or you can look at the markets as a whole. What I do is look at the markets as a whole. You can say, historically, what is the average P to E ratio, right? Because if you're way above that, that is indicating that the markets are overvalued. Right. Same thing with stocks. Like if you see, the average P to E ratio of tech stocks is 18. Everyone's at 18, 19, 20, and some dude is at 100. that's telling you there's something going on. That stock is overvalued. I'm giving you the
Right.
basics, but that's a very good way to look at it. So let's look at this chart. Okay. This is showing you that 90% of the stock market by sector is their P to E ratios are in the top 25 that they've historically ever been. Does that make sense given what's going on? Now look at the other peaks. Where are the other peaks? 2001. Did we have a crash then? Yep.
The .com, right.
2020. Did we have a crash then? Now, 2008 was a little bit different because that was more related to mortgages. So throw that one out the window for right now. But given what I've just told you about money and profits and inflation and everything Dr. Scott's been talking about, does it make sense to you that these numbers should be so high? No, what this is telling you is everything is massively overpriced because the prices of the stocks have gotten pumped up to all times high, but their earnings have either stayed stagnant or gone down.
Right.
Okay. And this is a predecessor to a crash, in my humble opinion, although I'm not a financial advisor. Another slide. Here's just another way to look at it. All right. This is going back from 1901 through August of 2024. Well, let's look at some peaks here. Again, this is when P/E ratios get way overvalued. What do we have right here? This dot. Isn't that 1929?
Yep.
Sure is. Then we got coming into the 70s. Yup. You got a blip right here in 87. Yup. 90s, et cetera, et cetera. And now here we are again. Here's 2020, this big jump right here.
And it's way higher than that. If that thing, if they really put that thing out the right area, it's higher than that number. But
yeah. Right. And what the caption says, this is one of the most expensive markets in over 100 years.
Right.
Today's levels, meaning the P/E levels, are even more expensive than the peak prior to the 1929 crash. The last time such a valuation run-up happened was during the dot-com bubble. So basically what this is showing you is that by the P/E ratios, by many other ways to do it, everything is overpriced. That's the most simple way I can break it down to you guys. It's overpriced. If you're buying a stock for $100, it's probably worth 60. So I ask you again, would you go out and buy, a Chevy truck for 60 grand if you know that the book value on it is 30? Of course you wouldn't. So don't do it in your 401k or your IRA. At least just know where your stuff is invested. And I'm doing this for a reason, this whole picture. We've gone through the inflation. We've gone through earnings. You see how the earnings are affecting the market. Although it's overblown, the numbers, when you drill through, show you that. Jobs. Well, we just established these companies aren't making money because everything's gotten so expensive. Look at this drop in job openings. And now let's go back. Look at the first arrow. Look at the right arrow here. This is right now. Now go to the left. Look at this other arrow. Where is that? The dot-com bubble. Where is this one? In the middle. 2008. Where is this one? Obviously, the pandemic, 2020. You see a pattern? Do you see what this is trying to tell you? That everything is headed towards some sort of reset, some sort of correction of the market. I don't even like using the word crash because that is more like fear porn. But in my humble opinion, if you think the markets across the board, stocks, bonds, everything, are going to stay where they are, or that what you're seeing right now is reflective of what's happening in the economy. See, guys, that's the trick they've played on everybody for my entire lifetime. They use the shiny object, and people are finally seeing through it, but they use the shiny object, which is the Dow Jones Index and the S&P. They don't explain to people actual things about profits and P/E and just basic things that anybody could learn in a 20-minute online class to empower them about where their money's invested. And then when one of these crashes happens,